What do you need to know before you start trading options? Welcome to Options for Beginners Part 1. We're going to go through several different questions here, answer each one of them systematically. By the end, you'll be ready to at least start investigating. Now, there's going to be temptation to skip this one because it's all the beginner questions and it doesn't dive into the how-to and the what-ifs. Skipping these could cost you a lot of headache, heartache, and money down the road. So take a little bit of time, go through this video, absorb it, then you can get into the how-tos. We have a part 2 coming soon, I promise, okay? Who can buy and sell options? Are stock options good for beginners? How much money do you need to start? How much does it cost to start trading? What type of option trading is best for beginners? What strategies do you want to use? What does this all mean for you? We're going to dive into all of that, but first, what is your goal? How much money do you want to make money on the side? Is that it? Do you want to build wealth, retire early? There's a whole bunch of different options there. How do you plan to get there? Maybe this can help. The ultimate side hustle for Canadians. So we took a study of real life study, real people, 4 different side hustles, and we compared each side hustle by the numbers. We distilled that down into nuts and bolts comparison, case study, and we're offering it to you for free. So if you want to download that, you can have it for free. It's completely yours. The link is in the description below. You can grab that now. You can wait till after the video if you want. Either way, it's there for you when you're ready. Let's keep going to stock options. Who can buy and sell options? Everyone can technically buy and sell stock options, but not everybody should. It's pretty easy for someone just to go and load up their account with index funds, index ETFs like SPY, QQQ, VTI, VUN, VFV. If you don't know what those are, don't worry about it. It's not important at the moment. However, not a lot of people will actually have the patience for option trading. And you're saying, wait a minute, how can this long-term buy and hold thing not be a patience thing? How can someone who buys, say, S&P SPY, which is the S&P 500 index ETF, how can someone who buys that and waits for 20 or 30 years not be patient? Well, you can just forget about it. You can set it and forget it. There's not a whole lot of emotional investment required. When you're buying and selling stock options, things don't always go your way. And it takes some emotional fortitude, patience, to be able to see it through. Because if you're doing it right, even if you're wrong, you can still make money. You just kind of have to weather the trough so you can get back to the peak. I know that doesn't make sense right out of the gate, but if you feel like you have a handle on that emotional roller coaster, maybe stock options are for you. Can you see a big negative number and have the patience to see the trade through? That's the big question. Are stock options good for beginners? Now you might be thinking, well, gosh, stock options are so volatile. Why would beginners even get into it? I'll actually say they're relatively safer than stocks. When you buy a stock, you are subject to its movement in the moment. No matter what happens to that stock, when that stock moves, your portfolio moves with it. I mean, nobody thinks of it that way. It's just a given. Nobody thinks that, oh, well, my portfolio is as volatile as the stocks that I own, because that's just a given. If you do it right with stock options, it's not a given. You don't have to be subject to the volatility of, let's take Apple, for example. Buy Apple stocks, it goes up, your portfolio goes up, goes down, your portfolio goes down. Now you can diversify, kind of hedge against volatility, hedge against that crazy market movement when it comes, or you can buy or sell stock options. You have to be right when you're trading stocks. If you're looking for that quick in and out, buy now at lower prices, sell a little bit later at higher prices, you have to be right about which way that stock is going. Stock options, not so much. It gives you that buffer. Even if the stock price drops, you have a threshold. It could be $50, and your threshold is at 45. If it drops to 46, you're still safe. We'll get more into that later. How much money do you need to start trading stock options? I personally started with $10,700. I saved as much as I could for several months and put it all into, I see my account as an accelerated savings account. So right away, you know that I'm not some flashy money-making guru, right? That's not who I am. I'm someone who I don't want my money sitting in a savings account. Most people I know, including Erwin, he started out with $10,000 too. Now he's got a multi-six-figure account now. The value doesn't really matter. The point is, you want enough money to get started. You want enough money so that you can actually trade. So I've seen some people ask, can you start with $100? No, because every stock option contract is for 100 shares. So you would have to have a $1 stock to be able to buy or sell a option contract on that stock. And at that point, maybe a $1 stock isn't necessarily in your wheelhouse, might not be the safest choice. That's up to you. If you want something like TD Bank or RBC Bank or Suncor or Cineplex. Last I checked, and this was a couple months ago, I didn't do that much research coming into this video. Cineplex was at $14. That's still pretty low. Some people believe that Cineplex is going to come back, and so they want to buy it at these prices because they feel like it's going to go up as restrictions open up. That's a play. You want to know, if you're buying the stock, you want to know that you're right. If you're trading stock options, on the other hand, you have some room for error. Now, you can't trade 100 shares of Cineplex at $14 for just $100. You have to have that full $1,400 available, or at least it would be smart to. So we always recommend that you start with at least $10,000. We know people who have started with $5,000, and there are more efficient strategies that make better use of your money, but that can take some time to learn. Plus, you want to know that you have some cash available should things go sideways. How much does it cost to start trading stock options? Every brokerage charges you for each transaction. If you're looking at the banks, they're usually charging you anywhere between $5 to $10 per transaction. So if you bought 100 shares, that you're paying $10 for that transaction. If you're buying one share, you're paying $10 for that transaction. If they're allowing you, not all brokerages allow you to trade stock options either. If they are allowing you to trade stock options, the same concept, at $5 to $10. Now, we at Stock Hacker Academy, we use Interactive Brokers Canada. They're a big broker. They're publicly traded. Their software is massive. It takes a little bit of getting used to it, but everybody who's gone through the course, that's what the course is for. It's there to teach you how to get used to that software, the phone app and stuff like that. Their fees are 75 cents per transaction. Now you're paying monthly for live data, but if you're making money each month, you don't even realize it. Just the cost of doing business. This isn't a cost so much as it is a consideration. Some brokerages will want to know that you have the money to actually trade. They want to know that you're not trading your life savings. They want to know that you are going to be safe should something bad happen to your holdings or to the market in general. So where it's not necessarily a cost, it is a financial consideration. What type of option trading is best for beginners? Two, and we're going to dive into these a little bit here. We won't cover them in detail right now. Options for beginners part 2, you'll see a lot more of these strategies. You can sell a put option contract, or you can sell a covered call option contract. Selling put options. And just for ease, selling a put option, we just say we sold a put or we wrote a put. Writing a contract, wrote a put, kind of go hand in hand. Okay, so we don't always say put option contract or call option contracts like puts or calls. We boil it down to that. So a put is essentially, when you sell a put, you essentially promise someone that you will buy their stock, buy stock from them at a specified price by a specified date. It's a promise, it's a contract. So XYZ stock at maybe $93, sorry, and then maybe $95. You want it at 93. You're like, okay, 95 is cool, but I would rather buy it at around $93. So you promise me that, say, listen, if XYZ drops 93 bucks, I'll buy 100 shares off you. How's that sound? Say, sure. And then you say, okay, now, because you're essentially ensuring that I don't ever lose more than $93. That stock could drop to $82 and you're still stuck buying it at 93. I don't recommend you going that close to the current price. We usually play a lot more conservative, but this is just for examples right now. Because you are making me that promise, because you are taking on some risk, I pay you a small premium. It's insurance. I'm paying an insurance premium. Let's say it's 95 cents per share. Now, every option contract is 100 shares. 95 cents times 100 shares, $95 cash up front, cash in your pocket. And you have that buffer. The stock can go down to $94. That option contract still technically shouldn't get exercised. There are technicalities in there, but don't worry about that right now. We're just looking at the overall function and form of this. Selling covered call option contracts. In this case, the covered part of the covered call is important. It means you own shares already. If you sell a call and you don't already own the shares, you're putting yourself in an unlimited risk situation. Don't do that. That's called a naked call. Do not sell naked calls. Selling covered calls, however, can be great for beginners. Can be. Let's say you own 100 shares of XYZ at an average price of $97 per share. Maybe you're willing to sell them at $107. And I come to you and say, sure, I'm willing to pick up XYZ for 107. I think it's going to 207. I don't know. You promised to sell me 100 shares of XYZ for $107 per share. And that promise lasts for a couple months. So between now and the end of our contract, the end of our agreement, if it reaches $107, I have the right, doesn't mean I will, I have the right to exercise that contract to buy those shares at 107 bucks. Now, you are taking on some risk here. Those shares could go clear past $107, like I said. You're at risk of leaving some money on the table. For that risk, maybe I say, okay, this is worth 50 cents a share. So 100 shares times 50 cents equals $50 upfront cash. So in both of these circumstances, you are collecting money. And it's immediately the moment you put the order in, it gets fulfilled. The moment it gets fulfilled, that's cash in your account. With this one, you're actually getting paid to own stocks you already have, like your own little dividend. So what does this all mean for you? I've just gone over some technical stuff, some high level stuff. What does it mean for you? It means, first of all, if you don't know what you're doing, you could completely blow your finances up. And we've seen that time and time again, and it's tragic. Please be careful. Please know what you're doing before you get into options. But it also means that this is a potential new source of cash flow using strategies that give you a buffer in price drops, and they let you profit from stocks you already own. And these are just two strategies. Now, you're looking for a new source of cash flow, maybe a new side hustle. I want to revisit this Ultimate Side Hustle for Canadians ebook, this case study that we have. Stock options is one of the side hustles, and we compare it to e-commerce, MLM, and real estate investing. And we do, it's a by the numbers approach. Same person, all 4 side hustles, the amount of money and time they invested in each, and the return on their time and money. The free case study, you can have it right now, completely yours. We want to show you what's possible here in all circumstances, okay? And then you can choose. So if you want to download that, the link is in the description below, and piece through it, and then you can come back and comment on what you think. That's all for options for beginners part 1. Part 2 is coming next week. Look for that one. Make sure you're subscribed so that you get the notification. Well, I guess you have to hit the bell if you want the notification. So make sure that happens too. If you have any questions, feel free to comment. We'll answer as best we can. Some questions, this will probably stir up a lot of really technical stuff. Some questions we can't answer in full, but stay tuned, stay subscribed. This is just the beginning of stock market and stock option information and education that we're releasing. Okay, see you later.